Good morning. How we doing? Happy Thursday. And today's a good day. You don't want to know why? It's because I've been scratching my head on why we haven't hit these equal highs, and guess what? We finally ran these equal highs. Not the way I wanted it to happen. Not even close to the way I wanted it to happen. But sure enough, it did. It ran it. And it's still running it. And I think we may even go higher. I don't know. Well, we're going to get into the charts here. We're going to look at the numbers and see what's going to happen today. I am more excited about trading today than I was trading FOMC. I felt weird for FOMC. I'm just like, I feel like this is the recipe for gambling. And I just don't like it. I'm glad I really didn't do anything. I am much more excited about this trading day. So we're going to get into the charts here. I got the sun literally shining on me right there. I got a glass door and the light's coming through the window. But it's going to be a blessed day. So we're going to start it off right. We just thank the Lord, Father, for a wonderful day of trading. We receive the profits that you have for us today. We are grateful for your provision. And thank you that you've given us the ability to produce wealth. And today we're going to produce some wealth. We're going to produce wealth because that is the ability that's been given to us. So we're going to look at the charts. We're going to break it down. We have just had this steady incline, and there's the equal highs that I've been coveting for so long. They've been just sitting there, and then when do we hit them? At 3 a.m. New York time. Then we retrace, and then we just explode higher. Now, this level right here is the midpoint, is the consequent encroachment of the weekly, I believe, might even be monthly. No, it's the monthly wick. So if we pop out, nope, it's the weekly. If we pop out to the weekly time frame, here's what we're looking at right here, okay? So we've been waiting for these equal highs to be ran. They've been run. We have this previous day high sitting right here. We're going to mark that as well. It's actually a previous week high. So we're going to mark that. That's a key level. Where is that level? There it is. How do I make this a little bit smaller? So we have the previous week high, which is, let's see, 1, 2, 3 weeks ago. 3 weeks ago high we have sitting right here. And then we have the monthly high sitting up here. Okay? And then we have the consequent encroachment sitting right here. Now, what's interesting is if we run this there, look at what this level overlaps with just about. If we break this wick down into quarters, this previous week high is sitting right in that first quarter. We have our second, third, and fourth quarter of this wick. So we want to see how this reacts to the previous week high here. I like that level on a higher time frame basis. Now it's Thursday. We could get a reversal on Thursday. Very possible to get a reversal on Thursday. Or we could just blow right through this. Having this large run in the pre-market makes me feel like we're going to retrace some here. We have our equal highs here, midnight open down here, and then down here we have our opening range gap, or excuse me, our new day opening gap sitting at the bottom of this range. Now we could come all the way down here. We could stop at this mitigation block, stop at this breaker, midnight open, the equal highs. So we need to watch all of these levels to the left and identify these levels so we have a potential area to know if prices hit a key level or not. We don't know which is the key level, but we know that there has to be some level of retracement. Where that wants to be, we are yet to know. Here's 50%. This is the 50% mark. So preferably, I would like to see a retracement down into this fair value gap if I had a preference. This is the hourly. This is an hourly. We'll zoom down into something a little tighter. The reason I like this is it's sitting right below in discount, and we have an order block sitting right here and right here. So we'll see what's to come here in the near future. The CE of the 4-hour fair value gap, that wick you are looking at almost overlaps perfectly. I know. Yes, 100%. Now, I am on ultra low today. I remembered. So we are streaming with only about 4 seconds of delay. It's what I prefer. But I don't know. Let's see here. I mean, that's the weekly. The daily time frame, not much different to look at. We've just expanded so much over the Asia and London session that could we see a trending day? I think that's very possible. We have some type of a pullback in this fair value gap, and then we've exploded higher. Now, it's hard to assume that this was our target when we've ran past it by over 70 handles, 80, 100 handles almost. So it's hard to say that that's the target. Makes me think that this previous week high could be our draw on liquidity to the upside, if not higher. So I'm looking for somewhat of a retracement before we hit this previous week high, and I would like to use that as my draw on liquidity. The other option is we hit this level and I play the retracement, or I play the reversal play, and we have relatively equal lows sitting right here, which could be an easy draw on liquidity. And right below these equal lows, we have, let me drop down to the 15-minute here. Below these equal lows, we have a 15-minute fair value gap overlapping with an order block. I like this as a point of interest or a target. Meaning if we get a reversal up here somewhere that we can play to these equal lows, or we could play into this fair value gap. that overlaps with this order block right here. So those are some things that initially catch my attention this morning. And it's just going to be about being patient and waiting for our setup to take place. Now, I'm going to be trading my Apex accounts. I'm going to be trading my funded Apex accounts on a copier. I'm going to copy some funded accounts. We have our opening price taking place right now. $9.30. We're going to mark $9.30. And then we need to mark one more thing. We need to open the regular trading hours, and we're going to have this giant gap right here. Now, we're not looking for this whole thing to be filled, not by any means, but we will want to see maybe the halfway point. We want to see where that halfway point is in relation to the rest of the range that we've been looking at. And it overlaps nicely with this consolidation. So makes me look at this as a potential market maker sell model. And right now we're looking at where is the smart money reversal? Do we have a smart money reversal coming up soon? So there's a couple things that I like, that I do like here. This is just too bright. Let's reduce the brightness of this here. Is it giving it to me or what? Folks, I'm having an issue here. We're going to reload this page. So my trading screen is going to disappear here for a second. It's not letting me log in. Interesting. I'm having an issue with Apex here. I don't know if it's Apex or not. I just know it's not loading like it should be. There we go. We're We're still waiting for our first fair value gap. See if a fair value gap wants to show. This does not count as our first fair value gap because this is the opening price. So we don't count this as part of the opening price. So we're waiting for our fair value gap to show up. And as far as news goes, do we got any news following FOMC? Today's Thursday. And we have 10 a.m. news. Existing home sales. The existing home sales that are here, it's an orange folder, nothing major, but it's something that we're going to want to keep an eye on. So I'm going to mark the news by putting this right there. So I don't forget. I do like these equal lows here. Not sure if it's going to give it to us though, right now. Yeah, I don't think it's going to give it to us right now because we still have higher prices. We have our weekly, our previous week high that's sitting up here. Even though this is not our first fair value gap, I'm going to mark it because it can be this could be a play to the upside, and it looks as if we're going to get our first fair value gap somewhere in here. If I take this play in 40 seconds, it will be a tight stop. It'll be a quick play. We have a swing high sitting right here. Stop needs to be to break even right now. And I didn't get to take it off. I'm going to see if it gives me another push. I'm going to take it off there. I'm just concerned that it's going to reverse after hitting this high. So that's why I took it off. I would have loved to hold it to here. I just don't think it's going to do that. So I just played this to right there. That was the trade that I took on that play. And that didn't quite give me 10 handles. Give me about 6 handles. And I don't care if it runs here without me. My concern was I missed taking profit off the swing high, and I didn't move my stop to break even. And at that point, I'm like, do I just want to take profit, or do I want to move my stop to break even and get stopped out? I chose to just take profit. And I would have been stopped out. It did wick back down, so it would have stopped me out at break even. Here's our draw on liquidity. What I'm going to be interested in is after we hit this level, pull back into the opening range gap. And I think the midpoint, these equal lows, all are decent areas of interest. Let's see what happens at this 930. See if we come back and find support at the 930 price. Fair value gap right here overlapping with this high. Great area for support for a push higher. You still got 30 seconds on this candle. Heck of a candle. I see what that was all in 30 seconds. Let's see what happens over the next 20 seconds. It wouldn't surprise me if we slowly tick back up and then close at the 930 price in 13 seconds. It may not. I've seen that happen before. Okay, we filled this, the first fair value gap of the day. I'm going to get rid of that one now. We are, in my opinion, in extreme premium. We are in extreme premium, and when that's the case, it's very hard to want to go long unless you can confidently assume we're going to be in a trending day. And I don't know if we're going to in a trending day or not. Those are hard for me to pick. Yeah, I don't like that. Have a look at ES. What's going on with ES? I don't know what's going on with ES. I don't really have ES on here anymore. I don't even know. Is that ES? No, that's not ES. That's how much I look at it. I don't even have a chart for it. ESZ. We're about to hit all-time highs on ES. Having quite a reaction to it. Yeah, they are out of sync. We have an SMT. That this could keep dropping here. Did we close below? No, we didn't. Ten seconds. I can see this pushing lower right here. See if it happens. Nope. Order block right here. Let's see if it wants to push through that. Watching the mean threshold of the order block, or if it's going to reject right there and move lower. Oh, that looks really good to go short. Not going to do it. Not going to do it. Can't do it. Follow the rules. Follow the rules. Let's see. ES. I mean, I guess ES could make all-time highs. It doesn't have to. It swept this high right here. It swept that high. It could also find this breaker right here on ES. Let's go to the 15-minute. 5. I like the 5. You know what? Based on how it's been moving, it's not horrible price action, but I think news is sitting right here. We got 10 minutes till news. I think it's wise to wait till the home sales comes out at 10. If this closes here in 22 seconds, that would be a trade to this low. It'd look like this. That's your stop, and that's your target. It looks like it's going to do it before we actually close. There's your close, and here's your push. See that? That is the model in a nutshell. towards those equal lows right there. Ah, man, that really was the trade. I just made a decision that I was going to wait till news. Could have been the wrong decision. If you guys are appreciating the commentary, hit the like button for me. I'd appreciate it. Lets the algo know that people are appreciating the trading that we're doing. So I appreciate that. And also, if you are using Apex as your prop firm, I ask that you consider using the code DTJ. It gives the most updated discounts on Apex. Right now, 80% off. And I am testing out my funded futures. I just purchased an eval from them. We're going to get an idea what it's like working with my funded futures. I'm going to do probably a video on it, do a review, comparison between Apex and my funded futures, and give you my opinion. Now, I probably will use some type of link for it, but it honestly does not affect it doesn't affect how I'm going to talk about it, because I really don't care. I'm going to give my honest opinion if I'm going to use one or not. I really don't care. So I just want people to use what works best for them. Yeah, all right, $250. Well, be careful. Do not say to yourself, well, if I do 2 contracts, I only need to get 5 handles. Don't do that. That's a recipe for disaster. All right, so I'm going to get rid of ES here. I want to watch NQ. I'm watching this level here, which is a nice point for a breaker, but then I'm concerned on us going higher to this higher point. So we got 2 points of a breaker. This is frustrating. You should take the first one but expect it to reach to the second one. That's hard. I don't like that. I'm not a fan of that logic. But here we just wicked into this fair value gap right there. I honestly would love to get into this one, and I would look at taking. I don't know if I want to go short, to be honest. We have the previous week high sitting right here. I think it's foolish to think that we're just going to leave it. But I've been in a position where it did not run levels like that before, and it just keeps on dropping, and it drops without us. So it's going to be a judgment call on each individual's part, and make sure you have proper risk management. But let's go to the 2. Yeah. I think I like this here. I just want to see. I'm going to watch this inversion fair value gap right here. If we break through this and close above it, that in 48 seconds, this is the entry for the short, but I'm concerned about this. So I'm going to wait, see if we inverse this. If we inverse it, it tells me, hey, less probability. You may not want to take that trade. So let's see how this reacts right here. Because we did sweep sell side, and we could just push right here to go higher. which I like that idea as well. Honestly, I think I like it a little bit more than taking the breaker, but we need it to close. Let it retrace here. Give me a deeper retracement. Come on. Deeper. All right. We're going to go long there. Let's see. Stop loss is below this fair value gap that we just inversed. We're going to see if we want to find support here and move higher. So I did not take the breaker, but I'm going to use now this breaker as support. See if it wants to find support at this breaker and inversion fair value gap and move back towards these highs. We are running into a breaker here, so I mean this is one of those trades you just got to put the risk on the table to see if it wants to do it. I'm not a fan of the way this 5-minute looks at all, actually. Not at all. It has too much, yeah. I cut that short. We got news here in 1 minute. I'm going to just see what happens with this news candle first. Pretty much no reaction. The trade is green. I cut my trade early. It's my fault on not sticking with the rules. I just didn't like how big my stop loss was. I think that was the biggest thing. Yeah, it's 50-50 for me right now. Inversion, but also breaker right here that we're respecting. It's a nice breaker. So the only other option would be, yeah, it's 50-50. I'm gonna have to wait. Even though one of these trades is gonna work out, I gotta wait. I need you to understand though. Here's why. You have an inversion, meaning we move higher. It goes right into a breaker. It finds resistance. This trade isn't invalid until we close below this box, but if we close below this box, we close below this fair value gap right here, which is an inversion to the downside. So we got 4 different confluences for 2 different directions. We do have a higher time draw on liquidity, which makes me think we're going to go higher, and that's why I went long. But I've been wrong in the past where I go to this level and it's not the right time. So I still think we are going to end up going higher. It's just, am I timing it right? This is our first fair value gap. I'd play a close, support, and long on that. Because at that point, it's invalidated the breaker bar. Okay, so we're still in that breaker. It's just when you have options that can go either way, it is safer to sit out. It's one of the hardest things to do because who wants to miss a trade? But if I have to logically, taking the emotion out of it, think about, do I want to miss a trade that's 50-50? That could go on one hand go for me or on the other go against me? Or do I want to wait and not take anything and wait for a better setup that has better odds, 60-40, 75-25, right? I mean, my gut's telling me we're going to go higher. But my gut's been wrong before. So another inversion, fair value gap. This is the first fair value gap of the day. Did we not close above that again? This is still a decent move here. 21 handles, 22 handles. for a 12-point stop loss if we get up there. Do you guys just see how it's not running? This is why I'm setting out. I mean, it's not why, but it doesn't surprise me that it's doing this, because there's options to go higher, options to go lower. I'm biased towards the higher because of the previous week high. But even as we see it, does it look like it's trying to get there? I'm sure it will at some point. It's not showing me it wants to. Is ES going back higher? Probably. It doesn't look any better. You got a breaker right here, that's nice. Okay, so we closed above this fair value gap. We're watching this one here. Got a volume imbalance right here on the 5-minute. Don't be shocked if we just wick down there to go higher. And this was the inversion fair value gap right here. Alright. If this wick turns into running this inversion in the next 1 or 2 candles, I will take a long out of that. Towards these highs, this swing high, and hopefully the previous high. Oh, he's going to take all of it away, huh? There's absolutely almost nothing there anymore. Watching the midpoint of this candle right here. Does price want to stay above this red line and move higher? We have a close on the 30-second, but I think I want to wait for the 1 minute. Okay, it's gonna, too high, didn't work, ran without us. But we had the right idea, didn't we? This candle comes back down into this initial inversion fair value gap and then starts moving higher. We just swept this swing high right here. That's what I wanted to target. It just didn't give me an opportunity on the 1 minute. I'm not going to go long when I have only a handle worth of before my stop. It would have stopped me out. This candle would have stopped me out, so it would have been basically a waste of time. I mean, ultimately, like I was saying, Judas, I do think we are going higher. Just how we're getting there is the frustrating part. This is 9:30. Remember this. So this can all be considered manipulation. Your best longs are down here or right around the 9:30 price. That's really, because if we start expanding from here, we may not come back down here unless we are in a seek and destroy type of day. Target wise, what you can do, ICT teaches this, and that's what I teach, is you take the high and low within the 9:30 and 10 o'clock price. And you can make your projections from that. All right, there's the move. Let's see what happens here. Let's see if we close. It's really high in premium. I really don't want to take it, but I do at the same time. So let's see what happens here. I would love a retracement back down to 9:30. If it gives me a tag at 9:30 again, I would take it. I'm not sure it's going to give it to me because we closed above this fair value gap. Let's see if it gives it to me. All right, we're going to take an entry here. I'm second guessing myself, if I'm honest. All right, there's a wick into this small fair value gap above 9:30. I'm watching 9:30, the 9:30 price. This is also a breaker right here. We could retrace. It's been giving me one of these days. There's a breaker right there. I don't want it to go down there. I want it to bounce off of 930 here. Once we hit this high and this high, stop is moved to break even. That'll be something I will be gladly to do. Made equal highs there. It's a great candle. There it is. Stop. We're going to hold this. I wish I liked how to do it, but I want to see it push more. If it comes back, I'll move my stop here to give me 8 handles, but I'd like to see a push. I think I'm going to sell there. 20 handles. Considering how this day went, I am very pleased. I don't think you're wrong. I think what I'm going to do is actually turn into a micro and hold a micro long, because I think you're right. I just wanted to, because that's a copied account and it's funded futures. If it retraces, or it's not funded futures, it's a funded account. If it retraces on me, I have a trailing stop, and I don't want to mess with that. I'll take 20 handles and leave $400 copied on 5 accounts. It's $2,000. Judas, how long you been trading, my friend? You know what I do like, as far as just me calling price action, I got in a little early, but I said I wanted it to come down and tap the 930 price and then move higher from there. And that's exactly what happened. I'm going to jump over to the My Funded Futures. And like, yeah, I don't know why it keeps doing that. There had to be a news candle at 10 o'clock that we never filled the data high. Is that what that is? This is the high that Judas is talking about. It's a 10 o'clock high. This is on the 1 hour. Let's go to the 5 minute, see if it shows up on the 5. Yeah, this contract's not very good for it. So if I'm looking at the way, if I'm looking at this in light of through the lenses of AMD, the power of 3, at the 930 price is our opening price. So at 930, we have accumulation, then manipulation, then distribution. So here's our accumulation, back and forth. Then we have our manipulation to a key level, equal lows. And then we have our distribution, which is now above the 930 opening price. Now, if we go to our projections, we have our first projections sitting at 2,176 as far as a high goes. And very possible that we reach that level. And then we have this level up here, which is our monthly high. This is the monthly candle. This is a previous month's candle high sitting up here. Now, I'm happy to get 20 handles out. 20 handles is typically my base hits, 10, 15, 20 handles. I'm not really happy with 10 handles anymore. 15 to 20 handles is typically what I'm going for. And if I can get that on a copied account, I'm happy. I'll get to the point where I do hold for longer trades, and I have in the past. I have had my biggest trade was 2 weeks ago I've ever taken. I had a 168 handle move. And then last week I took one for 100 handles. But mostly, easily 90% of my trades are 10 to 30 handles. 10 to 30 handles is typically where I find myself taking my profits. Yeah, and I see the value in being able to say, all right, well, you took your long here. We hit our highs. Why don't you just move your stop up to, this high, which I did. I moved my stop to my stop would be here, and it would have stopped me out in profit. And then just let this retracement happen, and hopefully you get more. Yes, I agree. That will be part of my growth as a trader as I continue to trade. I've been doing this I've been trading ICT specifically since April of 2023. So it's been a year and a half, almost. October will be a year and a half. I'm going to watch this level or this level. I have a tendency we're probably not going to reach down to this level. But if we hit this level, which is a bullish order block, I may do a eval long. Morning all, just wanted to give a shout out to Apex about fast approval of payout requests submitted on the 17th, approved on the 18th. TOC, I just had that happen I put a request in on Sunday evening, and I was paid out in my bank account on Tuesday morning. So yes, there has been a significant improvement on their turnaround, and I didn't have no video, no emails, no pending approvals forever. It went like that. It went really, really fast. So I use Apex as my primary funded accounts. I'm testing out my funded futures right now. I have it actually loaded right here, so the trade you see will be on a funded futures account. But all my copied accounts, all my futures account, or my funded accounts that I have are all on Apex. So you can use DTJ. Easy free way to support my channel, because it doesn't. I can't even use my own code. Just FYI, I can't even use my own code. I have to use somebody else's code. So somebody else makes money off of me every time I get a new eval account. But you can use code DTJ for 80% off and 80% or $85 for your funded accounts. Now, from my analysis so far between Apex and funded futures, the biggest difference I'm seeing is that funded futures, period, is a monthly subscription. $80 a month. If you get the discount, it's about $40 a month, so about 50% off, but it's month after month. So if you were to compare apples to apples, it is apples to apples if you have an Apex accounts for 3 months. So you get an Apex funded eval account for $37, $33. Then it's $85 for the funded account. Let's say you pass that. So you're all in let's just say $120. Okay? Well, if you have 3 months of your funded futures accounts, you're going to hit that $120 mark. If you believe that you can be funded, you can get funded, and you can keep your account without blowing it, Apex right now, from what I can tell, is the better option. Apex is the better option if you can keep it. Now, also, if you blow through eval accounts, Apex is also the better option because it's cheaper. It's not $40. Even for the 50K account, it's $33, I believe. But Apex also has a lower one. They have a $25,000 account that you can get funded even faster. And that one, I believe, is $27 on the 80% off discount code. So that's kind of what I've gotten so far. I do like the dashboard of the My Funded Futures. I do like the way the dashboard looks. It looks sharp. It gives you nice numbers. I think Apex is totally lacking on that. It wouldn't be surprising to me, though, if they're working on something for, Apex version 2.0. But I don't know. I'm going to test it out. I'm going to do a whole video, give my full analysis on it. The Apex site is out of the 90s. That is 100%. It's like They're like, we see an opportunity. We need to get it out there. I don't care what it looks like. Put a billion words on that page. We don't care. And they did just that. They did just that. All right, so here's this order block. Let's see if it wants to find support here. It doesn't look that way, if I'm honest. It looks like it's going to run a little bit lower. So since we wicked below this order block, I'm not interested in that right now. I'm going to take that off. My next target for a downside is this fair value gap, and we're going to see how it reacts to this. How many pips are you averaging? 15 to 20, Felipe. 15 to 20. However, that's not my model, okay? I'm happy with those numbers. My model is liquidity. So when we took this long, right here, I got in long here. Yeah, I think I got in right about here. My target was not 10, 15, 20 handles. My target was this high. And that happened to be 17 handles. Now, because it was around the amount that I'm happy with, when it went up to 20 handles and it was at 80 ticks, because that's how I keep track of it, 80 ticks, that's when I decided I'm happy with that. I'm going to take that profit. And that is how I determined. That is where I'm like, okay, it hit the numbers that I want. But when I'm taking a trade, I'm watching liquidity. I'm watching this level here. And that is where you primarily should be taking profits. You should be taking a take profit, at least a partial, and or you move your stop to break even like that. So now you could take profit. If I had 2 contracts, I would take profit. I'd move my stop to break even, and I would hold the second trade. The reason I give myself somewhat a relaxed position on this is I'm trading a mini account, and I'm not only trading 1 mini. I'm not trading 2. If I was trading 2, I would probably take 1 TP, and then I would save. I'd save the other, and see if I can get a longer move. Jordy, my name is Tyler. My name is Tyler. Ted, yeah, are you talking 30 OB? Are you talking about Are you talking about the asset? I think that is. Or I don't know what 30 OB is. 30 second. Yes, 30 second. I actually almost prefer the 30 second. Here's when I'll use the 30 second. Okay, look at this. We're on the 1 minute right now. Actually, I want to see if this actually goes long right here. I'm going to do a small long right here. This is an eval account. I'm going to see if it goes here. Watching this. If it goes below this, I'm just going to cut it. I don't know why I took that. That was I don't like it. Because I wanted this trade anyway. Let me show you what I'm talking about. Where was it? I think it was right here. Okay, look at this bit of price action right here. Okay, this is the 1 minute chart. Here's the 1 minute chart right here. Jordy, we did take a trade. That wasn't the trade though. I was done. We took a trade right here. That was the trade. Got 20 handles out of it. But when I'm looking at the 1 minute or the 30 second, here's when I love the 30 second. When we see price run lower and then it aggressively starts running the other way, if we go down to the 30-second chart, look what's here. An inversion fair value gap on the 30-second. This is a little small, not my cup of tea. I wouldn't have taken this. But you'll see a 30-second fair value gap normally when you don't see one on the 1 minute and you got big candles like this, larger candles. This was a good example right here. This is one right here. So you see price reject this fair value gap and we aggressively run lower, but in the same candle we wick back up higher. Now if we were to drop down to the 30-second, let's take a look. The 30-second is not much better, but we see this 30-second fair value gap right here. And you can take a long, where? Right there. You can take that long. It closed above that. You target these swing highs. And then it kept going. So the 30-second will show you opportunities where they're hidden on the 1 minute. But it's the same concept. It's the same rules. It's the same logic that we're using, just on a lower time frame, because the best trades are the ones that move quickly one way and then change directions very quickly. And that's exactly what happened here. Is this candle at one point was a big black candle all the way back, all the way down to here. And then also in that same 1 minute, it boom, went higher and continued higher. On US 30, yes it does, Felipe. It does work on the US 30. That's what I thought you were saying. But OB, I was confused. Maybe you didn't even... Yeah, no, you didn't even ask. It wasn't even asked prior to you. All right, so this was the fair value gap that I was looking at, remember? So now I'm watching from that fair value gap. We're already in extreme premium, so none of these trades are A+ setups, guys. Just keep that in mind. The only A+ setup is if you take a short, but I'm not sure. My projection is that we go up to at least the 20,176. 20,176. Send up here. On ES, did it hit its high? It did. We could see lower prices. We hit all-time highs on ES. Yeah, I do like the idea of a short here. There's your breaker. Oh, right when I went to the 30-second, you see it. There's the breaker. Let's see if it gives us an opportunity. This is an eval account. Looking for 30 handles here on this trade. We got a 5-minute fair value gap sitting right in here. And we got, oh, this could go all the way down here, folks. It could just retrace. This has a potential to go all the way down to these equal lows. But we're gonna take it. We're gonna take it here. Let's see if we can get. I'm not gonna let this go against me here. I didn't take profit on that. Was hoping, I didn't like this candle here. That's why I moved my stop to break even immediately. If it comes back up into this level again, I might look at another short. Again, eval only. It could reach all the way up into here though, too. What is this level? That's the previous week high. Ah, I missed that, folks. This was the previous week high, so it doesn't surprise me that we bounced there. I should have took some off there. There's an inversion to the upside right there. To those swing highs. We'll take it based on model principles to show you guys. Eval again only. That's the trade idea. We swept the lows. We ran liquidity. Or we inverse this inversion, this fair value gap. And the trade would be cut as soon as we close below this. So you got 30 seconds left, and if it continues, then it's something that we want to get rid of. It hit this breaker, which I thought that we might run to these highs and then reject. Let's see what happens. So we did close. I forgot, this is the 30-second. So we did close, so this trade is done. I'm going to close it. Even if it goes back the other direction, the model is as soon as it closes below it, we close the trade. And I honestly think we're probably running lower anyway. You see how it wicked up into the breaker and then immediately rejected it as a good signature and price. I didn't realize we were on the 30-second. What does the 1 minute look like? Yeah, this is an inversion fair value gap here. $30-second looks better. 2 times I didn't wait for my levels, and I should have. Thankfully, they're on eval. I need to wait for the levels that I'm calling out. I wanted to go short when we hit back the breaker, and I didn't. This is very volatile. I'm not liking this. Made equal lows here. It could bounce from here and just completely move higher. It absolutely could do that. I'm playing that it's running to this low down here. It could really just push right here. Come on. This is where I want it, right here. Just be aggressive. We're in the macro. We're in the 11 a.m. macro. Come on. Here it goes. Okay, took TP number 1. Stop's going to be moved to break even from all this crazy volatility. Let's see if we get more of a push lower. Wouldn't surprise me if I get stopped out, but we got TP1. Let's see if we can get another TP here. Okay, stopped out at break even for that. This is crazy volatile, folks. We took 2 contracts on this market maker sell model here. Based on it hitting this breaker right here. I got in way late, about down here, to see if we'll run lower. And I see this right here. It's going to keep going. We just got stopped out at break even, which sucks. This is our big reversal. This This is the market structure shift. It wouldn't surprise me if we start changing directions. We were really aggressive all morning, and we got a lot of room to go lower. We hit this level here. So I'm going to look for a push down to 930. And then what I personally want to see is us come up to this level here. I want us to come back up to this low right here. That's overlapping with this fair value gap. So I want to see the push first. It doesn't have to go all the way down to 930, but I would like to see it come up into this level here as an opportunity to go short. Now, typically on stage 2 distribution, there is consolidation. We're going to see what happens if we go short right there. We have another low right here, which similar situation. But typically, if we get it right, there'll be a big aggressive move lower. All right, this is it. Push, drop, go, run. Honestly, this level down here looks pretty nice. I am watching this 930 though. 930 can act as support. I'm going to take that. I'm going to take the 10 handles and get out. I use standard deviations, Jordy. Sorry, I missed your message there. I use standard deviations. That's what these are. They're standard deviations. Oh, that's nice. Oh my gosh. I didn't even look at the bottom assuming we were going to run higher. Look at where the one standard deviation is right here. I like this. Midnight open, midpoint of the opening range gap. And this is based on the low and high between 9:30 and 10. That looks beautiful. I would probably make a bet that we hit this level. I'm 75% confident that that's what we hit. You can almost not go wrong by putting in a short at any point in time. If you hold it long enough, you can probably pull out 10 handles. That's what we're trying right here. Your best place to make the shorts are when you get a green candle that retraces. We hit 930 price. We probably can get a retracement right here. Let's see if we can get one more push. If I'm honest, what I think I'm going to do here is I'm going to probably cut this because we hit the 930 price and I'd rather reposition myself up here. Reposition myself here on the 30-second. Into this accumulation point right here. That's what this is. Market maker sell model. Do you use BB when fair value gap's valid? I don't know what BB is. I'm kind of being a little loosey-goosey. I'm done on my funded accounts. I'm done trading, like waiting for, I'm taking more loose trades based on the models that I've seen and just what I'm seeing as far as price goes. If we get up into here, I'll take another short. I'm going to look at that as an opportunity. There it is, but I want it to go a little bit further. That was a little too quick. We'll see if it wants to maybe reach up into this one here. Breaker block. Do you use breaker blocks when fair value gap's not valid? I use breaker block. I probably use breaker levels more than I use the block. So this would be the breaker block right here. This could also be one too right there. All right, there's my, I'm going to take a short there. I'll cut it if we go above here. So that was aggressive. Tells me we need to wait. Next interest of area is right here. I'm not looking at buy side at all at this point. I'm letting people think. I'm on the assumption that we hit the previous week high. ES hit all-time highs. We've hit the equal highs on NQ. We've been in an uptrend for the last week and a half. That I'm looking at this as a larger time frame market maker sell model. Let me show you. This is what I'm referring to. This is the 15-minute. That is my larger time frame market maker sell model. Accumulation or consolidation, manipulation down here, distribution. That's our buy side of the curve. Then we have our reaccumulation, another reaccumulation here, our purge for liquidity up here. Now we're in the midst of a smart money reversal. That's how I would see it. The hard part in this is, where is that smart money reversal? I like this breaker. This is too low of a time frame, honestly, for a higher time frame model. Because if you look on the 1 minute, there's not much there. We just got this euphoric bullish move followed by a complete retracement of it. So here's how I use breaker blocks, Viking, and fair value gaps. Let me see if I can find one here. right there. I wouldn't have taken this, but it's legitimate. So we have a breaker. We have a breaker right here. Low, high, lower, low. We see initially we come back down into the breaker high and we explode higher. Now we retrace. We retrace into the breaker block, but we also have an inversion fair value gap that's within the breaker block. This would be a point of interest. It's also overlapping with 930. I referenced 930 before I took my short. I told you that I did not want to get in short here. I did because I'm like, loosey-goosey. I mentioned that. I took my short up here, but we just blew right through it, came into this. Look how it respected that fair value gap right there to the tick. That is crazy. Now this is what I'm talking about. Timing is everything on this. But this inversion fair value gap overlapped with the breaker. So I would rather in the wrong word is, do I use it instead? You have it correct. I combine them. Or I use them as overlapping confluences to show me price is going to go a specific direction. Okay? Now this is very aggressive. This is something I really like. But before I do that, I need to see where it closes. We're not closing below this last 1 minute fair value gap. So I'm going to just pause and wait. Maybe it wants to come back and hit this breaker again. But before I take a short, I'm looking at this level right here for it to close below it in light of this being a breaker and the fair value gap sitting underneath it to move lower. Macro time window is everything, 100%. And we're in one right now. This is why when we were down here, it was 11 o'clock. And I'm thinking, okay, I like this. 930 is just the price that we hit and we bounced off of it. When you see this aggressive candle lower like this and it doesn't continue, it makes me automatically think we're going higher. Ted, is that an order block just left of the last swing high? Right here, yes. This is an order block on the 1 minute time frame. This is an order block here. All those are considered order blocks. We have an order block here. And to be honest, we can use this order block here. This is a giant order block, but you can use part of, let's go down to the 5 minute. I don't like using all of that combined. I'm watching this right here. If it closes above this, we probably run this swing high here. It would be an easy trade. I'm on an eval account, folks. I'm done with my funded accounts. I got a 20 handle win copied on multiple accounts, and I'm happy with that. Looking to run that high. And I'll sell it there. That's all I'm looking for, is those small wins like that are like almost guaranteed. Inversion fair value gap, closed above it. When it hits this high, you sell it. I waited just a hair longer to see if it was going to run this high. It stopped right at the breaker. I sold it. That puts me up on the day for my eval on my funded futures. We're testing out my funded futures, but all of my funded accounts are on Apex. That's currently what I use. Codes tagged or pinned to the top of the chat. Do you see how this is something that you can't see? This is what I'm about to share with you is something you cannot learn unless you're in front of the charts in the moment it's actually happening. These two candles right here, post price action, just look like they went lower and then it went higher. But what you miss when you're not in front of the charts while price is actually forming is when you see how aggressive this candle is and how fast it moves, and then you see it stop, not violating a fair value gap or ending before we hit a swing low. This tells a story that you can't see unless you're in front of it while it's actually happening. As soon as this closed, before it closed, I said, "Oh, this is aggression. We hit that breaker, we could keep moving." That's my initial thought. And I said, we need to wait to see where it closes. It closed here. So I saw how aggressive it was, but then I saw its poor close, and immediately I thought, this is going to go the other direction. Do I just get in along there? No, you don't. That's just stupid. You have to wait for a model. My model is a fair value gap here being violated, and then you target the swing high, 1, or you move your stop to break even and target your second swing high, number 2. And that's what you can do. Now this trade to move higher is still valid until you're hit at break even. Now, where did I get? I got in a little before that. I got in somewhere around here. So the stop would have been at break even already. We sold right here. But the idea is when you see price action take place before your very eyes, it helps tell a story that you would not see otherwise in past price action. So the value on sitting in front of your charts and tape reading and learning to read price action can only come by sitting in front of the charts. You can't do it in post price action. You can find your model, you can find your entry strategy, you can do all of that in post price action, which is great. But what you'll find out is that when you begin to sit in front of the live charts and then you look for your model, you get scared because you saw how aggressive this candle was. But when you sit in front of your charts and you see how aggressive it is, and then see it respect specific levels, it kind of builds that confidence level that you had the right idea, that you're moving in the right direction. And that's the value of sitting in front of the charts real time. That's what I would be doing. You will get more value out of tape reading live price action than you will post price action. Not figuring out your strategy, but figuring out how to read price. You can't do that post price action. It's impossible. It really is. Vin, food for thought. The 20,059 was the area ICT was talking about this morning about working as support. 20,059. Do you want to know, let's see, 59 to 73. Here's why he said that. This is my assumption. And I think I'm fairly correct in this. This fair value gap right here overlaps with this swing high. Also, hang on a second, folks. How's it going, man? Sorry about that, folks. What I was saying about ICT is right here. So you have this fair value gap and it overlapping with the premium portion of this wick. And on top of that, it's in the first 30 minutes of opening price. And ICT talks about your highs and lows, and the first 30 minutes of from 9:30 to 10 are referenced throughout the rest of the day. So this is an area that I'm not as flush on, as very, very clear on. So I'm still learning this. So this is great. I'm glad we're talking about this, to be honest. But you look at where this fair value gap is and where the high and midpoint of this wick is. 61, 75, 73. And what did you say he said? 59 to 73. So that is like almost exactly what he talked about. So he's looking at this wick to find support, overlapping with this fair value gap, finding support to move higher. This candle right here at 11 a.m. did wick down into this fair value gap here, which guess what? Balances the rest of the range. There's not a single fair value gap that has not been balanced in this range. So everything else, so basically it's saying, hey, we delivered price efficiently. Now we can move higher again. That's how I'd see it. ICT said the area would have to hold to support the bullish move. You are correct on that. Yep. Viking, thanks, man. I appreciate it. It means a lot. I'm glad this content is helpful. And you look at where the body's closed. They're closed in the premium portion of this wick too. If I'm honest, the only reason I'm still on is because price action is still nice where we can read it. You see this breaker right here? See how it wicks into that breaker? Here's the previous week high. Or no, that's the consequent encroachment of the weekly candle. Right there. This would be one right here. So let's assume in regards to a breaker, we got a high, low, higher high, and then let's assume it breaks lower and comes up in here and does one of these numbers. Here's the thing. You have a fair value gap. Let's get rid of all these. You have a fair value gap here. And what you would want to see on the other side of price, assuming we start moving lower like this. If we did something like that. What you would want to see is during this price action down, you'd want to see it break below this breaker bar. That's the breaker bar. The breaker bar, and then to the left, what do you have of that breaker bar? The breakers that are more probable are the ones that have a fair value gap overlapping with it to the left. The breakers that also have a fair value gap overlapping on the right as well are even more probable. And even more probable than that is the breakers that have price come back up into the fair value gap that's overlapping with the breaker. That is where you take your short to go lower. That is combining your breaker, which is right here. You could use the low as your breaker. You could use the close as your breaker. Either one is fine. You could use anywhere in between. You could use the low of the fair value gap or somewhere in between. You decide what your risk is, but you have a fair value gap on the left. You have your breaker. You have displacement. You have a breaker fair value gap on the right, and then you use that fair value gap to go short. That in short is combining fair value gaps and breakers. We made equal highs here. So these are equal highs. Stop loss is above the breaker. Stop loss is always above the breaker. So your stop loss would have been, let's say if we're going short here, your stop loss is tied to that. So 14 handles, which is not bad. A 14 handle stop loss, 10 handle stop loss. I've found that 10 handles typically, I would say 75% of the time will not be hit if you get the right entry. So if you use your entry as the close of the breaker right here, 10 handles comes close to the top. If it runs that, there's a good chance it's going to run higher, and you just accept the loss. So I am technically not positive on the eval account, down $200. But I'm going to be about done here, folks. I can feel it. We'll be back again here tomorrow. I'll tell you that much. Rocking and rolling. Do we got news tomorrow? Friday. No news. Interesting. Interesting. Now let's look at this one here. So now that we made a higher high from this down move, we look left. Oh, there is a breaker here or a fair value gap here. Okay. So I like that. Now the question, now we wait. We assume that this is going to be a breaker. We anticipate this becoming a breaker, and we want to see this give us a market structure shift. Okay. Now I'm simplifying this. If we have a higher draw on liquidity, this will not work. Okay. Which, based on the support we've seen on the higher time frame on right here. Oh, that's the weekly. Based on the support we've seen here, we potentially have higher prices. So it may not work, but we're going to see what happens. So if we're looking for an ideal situation, this would close aggressively, leaving a fair value gap here. Now, what we don't want to have happen is that candle covered the potential fair value gap that was going to be there. It's covered it. So now we're just sitting and waiting. Okay. The other thing you can look at, which is very similar to fair value gap on the left and fair value gap on the right is fair value gap on the left, order block on the right. This order block right here can be the point of price coming back up into it. So we have our market structure shift. What we don't have is a 5-minute change in state of delivery. This 5-minute change in state of delivery is really what tells me price is going to move the other direction. That's way down here. So this is almost a little premature. It's almost a little premature. I still have this as another breaker as well that you can look at. But we're just looking at where is price going? Is it here? Is it here? What do we want to do, right? It's 11:30. Not a time that I would want to take a trade. Not a time that I want to look for a trade to work out, but that's our market structure shift. We would see how it wicked up into there. These are lower probability because there's no fair value gap, but it can still work out. If we are expecting lower prices, it's the key to everything. You got to be expecting lower prices. So we're going to see if this turns into, it runs this low and just right here. This is technically the breaker. We got up close to it, not quite. I'm also watching the midpoint of this wick lower. If we can't get to that, then I might cut the trade because I still think we may see higher prices. So this is a B minus type setup. This is not optimal. Normally, this would not be taken. Especially with 3 contracts. Honestly, what am I doing? I want to get rid of those. Didn't realize I was in 3 contracts. All right, see how that just blew right through that? This is why you waiting for a market structure, waiting for the change in state of delivery is my preferred way of taking breakers, because there is no reason why it can't continue higher. It hasn't on a higher time frame. It hasn't really shown us any reason why it can't go higher in regards to structure. We've actually created an order block in the close of this candle right here on a 15-minute time frame. So order flow is bullish. So taking a inversion or taking a breaker to the downside in a bullish environment is not the best way to trade. If you're going to take it in a bullish environment, you need to wait for that extra confirmation, and that extra confirmation is a change in state of delivery. And I like to see my change in state of deliveries on the 5-minute time frame. Okay? So if I'm looking for these equal highs as, hey, if that's the point I thought price was going to go to, we look at the candle and we look left, and that change in state of delivery would be right here on a 5-minute perspective. So price would need to close on a 5-minute time frame below this candle here. Now, based on the structure of what I'm looking at and the way this, sorry, that's just not very helpful for you guys. My face is in the way. There we go. Based on the structure that I'm looking at, I actually would prefer the 15-minute time frame because this is the candle I would want to see closed below. Well, we're probably not going to get that, and these are just too big of candles for this to happen. So we're just in a bullish environment that we need to wait for massive displacement to show us it wants to run the other way. It would be a HR, a high resistance liquidity run in the opposing order flow environment. Correct. We are expecting prices to run higher, and it would be a high resistance to go lower when we're bullish. And I could tell that I'm getting fatigued, guys. That last trade was, I shouldn't have even done it. Don't even know why I did it. I didn't even realize I was in 3 contracts. So based on that, guys, I think I need to call it a day. I will be back here tomorrow morning, 9:20 Eastern Standard Time. Use the code DTJ. Hit the like button if you appreciate the commentary. I greatly appreciate it. Other than that, we will see you